stickler for time, so we will try and catch up as we can. Again, welcome everyone. Thank you very much for attending today. This is the meeting of May 17th, our board meeting for this particular springtime. We have another meeting again tomorrow morning. So we thank you all for attending. I'd like to remind the registrants that attending this meeting, or at least listening to us speak, will be worth 3 self-directed CE hours for those registrants. So that's a pretty good thing for that. This meeting is being recorded, and we will be streaming to this session on YouTube, of course. In the interest of time, I will therefore take the opportunity to introduce the board of directors if I could. Starting with Henry Wisniemi, he is a public member. We have Dorina Rees, who is an elected member. We have Neda Mohammadzad, who is an elected member. We have Samir Modirha, who is also an elected member. Elsa Lee, who is an elected member. Ingrid Koenig, who is an elected member. Peggy Judge, who is a public member. Omar Farouk, who is a public member. Diana Bristow, who is a public member. Murray Angus, who is a public member. And Stephen Kinsella, who is the vice chair and the public member, and myself, Brian Todd, a chair. I am an elected member. The facilitator today is Sarah Butson, who has done a fantastic job in the past. Sarah, thank you very much for joining us. For administration attendance today, we have our CEO and our steerer of the ship, Fazelle Khan. We have Amy Stein as our acting deputy registrar. Thanks for attending, Amy. We have Fizza Assad, who is the Accounting and Human Resources Specialist. Thanks again, Fizza. Carolyn Robertson, Manager of Communications and Executive Office, who has gotten us back on stream. Thank you very much, Carolyn. And Patricia Rigo, who is the Senior Coordinator for Registration. We have guests today. We did have one guest already, as George Cucci in a former session. We have Adam Goyette and Malcolm Vaz, who are going to be talking to us about our accounting and our money situation. So we'll count on them later on down the way. At this particular time, I have to, I have the pleasure of giving a land acknowledgement. Now, this is something that we are going to be doing on a regular basis going forward. I think it's an excellent thing that that we're doing, and I suspect that other organizations will be doing this also. So I will state the acknowledgement if I could. Today I'm speaking from you to you from the lands which I live on, which is the Robinson-Huron Treaty of the 1850 territory. I am located on the traditional ancestry land of the Anishinaabe King, Anishinaabe, Wabec, and the greater city of Sudbury, who it is also included on the traditional lands of the Wahnapitae First Nations. Now I'm going to hand this back therefore then to Sarah, and she can continue. Thanks, Sarah.
Great, thanks, Brian. So as Brian mentioned, we are a few moments behind based on the technical difficulties. So we'll try to catch some of that time up this morning through our sessions. Quick reminder, when we're hitting a consensus conversation, we'll do a quick high five. So looking for 4s and 5s in terms of moving forward, at which point we'll take a motion where Brian will read out the motion and call for someone to first, second, and then all approve, at which point you can state your name and raise your hand if you want a first or second. I reminded us earlier of the board questions to think about for public interest rationale, and I'll just do that quickly again. As we're having those conversations, remind yourself, does this decision serve the public interest? Are there potential unintended consequences? Are there any risks to the organization from this decision or policy? And do I have any professional interest in the outcome of the decision or policy? So just a reminder to reflect and use those as guiding questions as we embark on those conversations. So I'm going to pass it back to you, Brian, to take us through the opening pieces.
Thanks very much, Sarah. So we're going to go to 1.2, which is a conflict of interest declaration. I am going to ask the question, does anyone have any conflict of interest to declare at this particular time? And I apologize, I can't see everybody at the same time, but I'm going to, if you do, please yell it out. I don't see any. So then we're going to move, therefore, then to the agenda and the adoption of the agenda, which is 1.3. I'm going to ask, are there any amendments to the agenda that anybody wishes to put forth right now? I don't see any. So we're going to start with our first motion of the day. Would someone like to make a motion to approve the agenda as amended?
So moved.
I think that was Murray. Okay, Murray's number one. Number two?
Second.
Henry. Okay, all in favor, please raise your hands. Show. That's passed. Thank you very much.
Okay, move on to the
All right.
minutes.
Yes, please. All right, we're going to bring those up. Good. Thank you very much. Okay, so we're at 3.0, the minutes of February 22nd, 2021. That was our first meeting of the year. Does anyone have any amendments to these particular minutes? I don't hear or see anything. Therefore, I am going to ask for a motion to approve those minutes as circulated, please. Can I have a mover? I know somebody's got their hand up and I can't see you.
See Diana.
Diana, thanks, Sarah. That's Diana. Seconder, please.
Steve.
Steve, thank you very much. All in favor, raise your hands. That's passed. Thank you very much.
Okay, so we're going to
Okay,
move to Fiza Assad, the accounting and human resource specialist, who's going to give us an update on the financials now.
Thank you so much, Sarah. I'll just be sharing my screen here. And before we begin, I just wanted to confirm if this is okay for everyone, if it's visually accessible.
Henry, is that big enough for you?
Perfect. All right, great. And of course, if there's ever any time where anyone needs me to go back to a certain point, I can absolutely do that. So before we begin, I did want to provide a bit of background to provide a little more context into some of these numbers that you are going to be seeing. So as we all know, the financial variance report provides an overview of revenue and expenses incurred during the quarter. As you'll see, this report is to the end of Q1, March 31st. And as the college does not evenly receive revenue or incur expenses at fixed intervals throughout the year, the individual line items may not reflect an exact 75% variance to the budget, which normally indicates that we are trending on budget for Q1. And despite overall revenue and expenses being as forecasted. So often with our college's operations, our expenses are incurred evenly throughout the year, whereas expenses related to specific projects or consulting initiatives may be realized when they are billed. So typically variances are very high in the first quarter of the year. So I do just want to point that out just so there are no concerns or questions, but if there are specific line items that you'd like me to focus on, I can absolutely provide details there. So we'll start with our total revenue for the year. Sorry, not for the year, for the quarter. So the total revenue for this period is $2,318,978, showing a variance of $57,957 to the budget. So at this point in Q1, we are 3% over budget. A few highlights to consider with revenue is that optician revenue, line 3, includes deferred income from 2021 registration fees. Now, as you all know, those registration fees are accrued in Q4 of 2020 when registration is open and incurred for Q1 of 2021. Optician revenue for this year also includes some penalty fees which were incurred through discipline hearings last year and paid this year. Our national exam fees, line number 5, includes a French exam session in January at La Cité College. The number of eligible candidates remains impacted by COVID-19 as schools continue to be behind one semester. And line 6 here, interest and investment income. Yes, sorry.
Ask you a favor, just in the interest of time, can you sort of point out high-level things that the board we'd want to point out to the board right away, and
Absolutely.
then we can circle back and ask for questions as per any line at that point?
For sure, for sure. So just the point about the investment income is that that is usually incurred in Q3. For board and committee expenditures, again, we have an 86% variance to the budget. Board and committee expenses have been budgeted and forecasted with an amalgamation of 2019 and 2020 trends. The college has budgeted for virtual meetings for Q1 and Q2, and we ensure that there is a financial capacity to allow for in-person meetings should the COVID-19 situation improve in Q3 or Q4. The large variances here are mainly due to the meetings being virtual, as well as a point that some expenses and honoraria submissions to the college have not been submitted as of March 31st, but may be reflected in Q2's variance report. Moving down to our operations and admin expenditures. So we are at a 76% variance to the budget, which is in line with the reporting period. The expenses for council, education, and staff development, you'll see is at 42% to the budget. Now that seems to be a little high for this period, but I did want to note that this includes a payment to HPRO to cover training costs incurred in 2019 and 2020 as part of an account reconciliation initiative. General operational expenses, again, also 46% to the budget. Majority of this cost incurred is a result of bank charges for processing renewal payments. And this is not a cost that is replicated in Q2 and Q3. So this is the line item that should hold stable for the remainder of the year. And finally, the last point to point out here is the investigator line at line 30. As you'll see here, we are 26% to the budget. Now, due to the unpredictable nature of investigations and varying number, it's difficult to accurately forecast investigator costs. So as of March 31st, there are 12 investigations in process, and those can vary from being in part of 2018 to 2020. So those are just the high-level items, things for us to keep an eye on going forward. I did want to open up the floor to see if there were any questions about revenue or expense line items that I can provide further detail on.
Any questions? Oh, I see Samir has a hand up. Go ahead.
Fizz, I just a clarification on line number 4, national examination fee. As you had mentioned, it's just only one college that we had. The exam session was in January. That's a college list. It is the only college fee that we received. What about the exam that happened at Seneca? I thought the deadline for application was like March 17. Would that fee be included into that, or?
So the amounts that come into national examination fees, that is whatever is received by the college as of March 31st. So sometimes, even if the deadline is later in March, we will receive the payments for April. So those will be reflected in Q2's report.
Okay, and Murray?
Yes, I'm curious about the last line, the strategic initiatives, where we're 100% variance. What is the cadence of expenditures in that line item?
So as of the end of Q1, this cost incurred was to cover an outstanding invoice for 2020 for a governance initiative. We have not received any invoices in Q1, but if we incur any in Q2, then those will be reflected in the report.
Is that normal, that they're unpredicted?
Yeah, so as I mentioned, as for projects, the expenses are relatively hard to predict as in when they're going to be incurred, and they're reflected when the bill comes in, rather than being at fixed intervals throughout the year.
And also to qualify, Murray, so they're not unexpected. It's just unexpected as to when the bills will be received.
Yes.
Like we budgeted for all our initiatives. It's just that in Q1, a lot of this work hasn't started yet.
Samira, did you have another question?
Yeah, I do have. What I would like basically, I know this is very nice and detailed report. What I would like to see, say line 28, it says general operation expenses, and it has all the board members CPP and all those stuff inside there, right? I mean, for me personally, I would like to see what's the operational cost when we talk about board members, particularly CPP, whether say catering when we were at the board meeting, or say any travel expenses, any accommodation, anything like that. I would like to see a separate line for that's particularly related to the board members, anywhere between line 9 and 19. That's personal one suggestion. And a second thing I see also at the same time is a NACO related expense. We see a line, it says external personnel, where you have model examiners for the NACO examination, and then you have others inside as well. So can we separate those things, or I'm okay with this, but when we have a detailed report that gives separate breakdown for everything, how much the board related expense is happening and what's the NACO related expenses happening there. So that's just 2 cents that I have it.
So I see your hand up. Did you want to address it?
Yeah, there's a certain nuance, like when you start breaking down CPP and things like that, you start getting to certain sort of personal deductions per member and things like that. The fine granular detail is usually reviewed by the finance committee. So if we end up getting like a really granular report, you're just going to be duplicating at the board level what the finance committee is overviewing.
That's great. Does that answer your question, Samir? Perfect.
Yes.
Great. Okay, and then I see a question from Diana, and then if there's no others, we'll move to a motion.
I was wondering, so for example, on that line 44 where it shows strategic initiatives down 100%, would it be possible to add another column that indicates, next 12 months? So for example, you have strategic initiatives that are going, but, maybe the full amount will be spent in the next 12 months. So would it be possible to see what the rolling forward looks like?
So Diana asking about like a projected expense or projected variance. Fiza, did you?
Yeah, I think that's something that we may be able to include further detail in the notes about in terms of projects that are coming up so that you have a better idea as to when those expenses might be incurred. Is that what you were looking for?
Yes, that would be great. Either
Okay.
in the notes or another column that, 12 months or 2021 expected expenses.
Definitely.
Okay. Any other questions on the variance report? Okay, I'm not seeing any others. So Brian, maybe, I'm seeing a thumbs up, okay. So I will pass it to you, Brian, for a motion.
Thanks very much, Sarah. So my call right now is to have a motion to approve the financial reports as presented. We need a mover. That's Omar. Seconder.
Samir?
Sorry, Samir, I'm going to catch you the next time. I saw Peggy first. I keep picking on you all the time, but I'll let you do it the next time. All in favor, hands up. That's passed. Thank you very much.
Okay, so I'm going to pass the floor over to Fazal right now to present our next speakers for the 2020 audit report, introducing the auditors. So go ahead, Fazal.
Sure. We're just having Malcolm Vaz and Adam Goyette join us in a second. Oh, there they are, popped up into the windows. Good morning, gents.
Hey, good morning, everyone.
Good morning, guys.
So these are our chartered accountants from Greywell Goyette. Adam has starting to become a familiar face. He's been at our last 2 years worth of meetings, and Malcolm has been with us for several years. So they are in charge of our audit every year, and they're going to be presenting our audited financial statements, which are draft form, and are going to be in front of the board here for your approval. So Adam, Malcolm, we turn to you.
All right, thank you, Fazal. One of these days, you'll get my name right, Goyette.
Goyette, okay.
I'm teasing. I go by lots of different names. That's
you.
one of the pseudonyms. Good stuff. Well, it's lovely to see you all again. I believe we spoke to a few of you a couple of weeks back. I'm going to let Malcolm talk about the financial statements, and I'll chirp in as and when required. Just an overview. The financial statement audit is there to identify material misstatement only. And the good news is we've not identified a material misstatement. It's all within the confines of our regulations and materiality. So it's all looking good. It's clean as ever. The audit went well and smoothly, although we are remote. it's a little bit different. We like to be with people and seeing people eye to eye, face to face, but until we can go back, we are operating as we're operating. The good news is Malcolm has relayed to me that it was still as smooth as in person, and that the cooperation was still there, the transparency was still there, the quality of the record keeping was still there. So all told, everything's still looking good. And with that, I'll pass over the primary thunder to Malcolm to walk through the financial statements. Thank you.
All right, thanks, Adam. So what I'm going to do here is I'm going to do a screen share just to have the statements on screen for everyone. So it's much easier as I go through all of my tedious number talk. I'm just going to share right now. Bear with me. There we go. All right. Do all of you see the statements up there? Perfect. Okay, so I'm just going to roll through basically in the order of the statements. So as Adam already alluded to, the independent auditor's report, I'm not going to repeat what he just said, but covers that we've completed our audit. Everything was done, we're issuing a clean report. Again, just to reiterate, because it is an important point to note that an audit does not mean we looked at every single number, every single invoice. That's not just for the college, that's for any audit. That's not the purpose of what chartered accountants do. So we do it within a scope, but within that scope, everything that we tested was clean, and we are issuing our clean audit report as we have done every previous year for the college. So that's what the first 2 pages are. And I'm just going to scroll down and then pause at this page. So this page, your statement of finance, sorry, let me pause for a second there. I'm going to kind of be going on for a second, but if anyone wants to jump in with questions, please feel free to just unmute and stop me at any point. We will, of course, take questions at the end as well, but if something comes up and you want to have a quick clarification, don't hesitate to stop me as I'm going on. So here we are at the statement of financial position, which is essentially a snapshot of all of the assets and liabilities of the college as at our reporting date of December 31st, 2020. Pretty self-explanatory, but I'll just go through it again. So the college obviously has cash holdings as well as short-term investments, which are the GIC holdings in the BMO portfolio, interest receivable pertaining to those GIC holdings, and as well prepaid expenses, which is the last month's deposit on the premises, as well as some small prepaids in the prepaid flights for travel. As well, you've got your capital assets, all of the assets of the corporation, including the leaseholds done at the premises, which are being depreciated as normal. So in total assets on the balance sheet of just under 7 million, which is then represented by the liabilities, specifically accounts payable, which is just various payables to vendors in the regular operations of the college. The HST payable, which is all of the HST, of course, collected, which belongs to the government, not to the college. That number was since remitted subsequent to year end in January of 2021. And deferred revenue, which I'm going to pause for a second and speak to a little more in detail. So as you guys are fully aware, the decision was made for fiscal 2021 to reduce the membership revenue by 25%. But as you're also aware, your membership revenue is earned and collected in the previous fiscal year, meaning in December of 2020, almost all of your 2021 revenue is paid by the members, and that's what this number represents. So although it's already been collected and therefore it's in the bank account / investments held at the end of the year, this is not revenue for the college until 2021. So that's why it's sitting as what we call deferred fees or unearned revenue, which will be recognized in 2021. Sorry, go ahead, Adam.
Just to reiterate Malcolm's point here, this is going to be a very, very important number, and it'll all tie together on the next few financial statements areas. You're going to look at the income statement next, or statement of revenues and expenses, I believe it's called. And we're going to see the interaction or a relationship between the deferred registration fees and the revenue. So again, just to reiterate, because it is so important, this number is down because of the one-time reduction in fees. And maybe it's one time, maybe you're going to extend it. But if you do extend it, there's going to be knock-on effects you're not seeing in the income statement today, which we'll see on the next page, you're currently not seeing the impact of the one-time reduction. So we'll play it through with you as we go through the financial statements, but it is going to be a recurring theme of these discussion points right now. Okay. Sorry, Malcolm.
Yeah, nope, perfect. So yeah, exactly that. So we'll talk again about where this 2 million is going to show up next year. But right now, the reason why this is lower than last year's deferred is essentially this is the 25% reduction presently received, but not yet taken into income.
Malcolm, sorry.
Malcolm,
Yeah.
Go ahead,
Sorry,
Brian. Question.
Sorry, I'm going to jump in. I remember when we had the executive meeting, Adam and Malcolm, you were quite explanatory in the fact that if we did decide to do a fee cut, and we're going to discuss this down the road in the meeting, it does have quite a dramatic effect, does it not, on our assets?
It will. So I'll talk about that again on the next page to show that the actual impact that the one-time fee cut has and how it would actually, the time period it would take to recoup that. So you guys can then make an informed decision on should we do this as a one-time, or if we choose to do it again, fully understanding it's not something that in a year you recover. You're taking a hit which has a time period to recover. So I will talk about that in a minute or so.
Okay. And on top of that, just how long it takes to recover from a one-time or a two-time. The further period of time you do this, so if you make it multi-periods and not just once or twice, but even further into the future, we'll talk about what that looks like for the ongoing viability of the college as well. Okay.
So where that leaves us at this reporting date for this audit for December 2020 is the college has this combined number, which is about 4.4 million of surplus. So that is not obviously not the 1 year surplus. It is the running accumulated surplus, including the surplus from fiscal 2020, which I'm going to talk about next. So moving down to the income statement, I'm just going to get this onto one page for you guys. So this is really the gist of the operations for the college for fiscal 2020. And this is where, again, I'm going to reiterate, I know we're kind of beating it over the head, but to make sure that there's a clear understanding of revenue. You see here the revenue for 2020 is in fact higher slightly than the revenue that we show for 2019. So this is the actual earned revenue based on the actual membership fees that were paid for 2020. Although they were physically collected in December of 2019, it reflects income for 2020. So what you don't see on this report is your $2 million of revenue, which is the lower revenue for 2021, which we will see next year. So we want to be really specific and clear that even though at the bottom down here, you will see that there was an excess of revenue over expenditures, which is a good thing. This is not reflective of your lower membership fee. This is still based on the full membership fee for 2020, which in fact was a 2.5% fee increase over the previous years, as you all have previously done. So I'm going to, again, speak to these numbers in a second, but just to pause right there, if we were projecting what this is going to look like next year, this number is obviously not going to be 3 million. It's going to be more in the range of about 2.2 million, I believe, with the 25% reduction. So being aware that next year, you're going to have significantly lower revenue by choice, as was planned by the board, but you will have very similar expenses. And in fact, in some cases, you might even have expenses that go back to the norm. Just as an example, I'm going to highlight one right here. I'm just trying to look for it. Here we go. As you see right here, your council and committee expenses in 2020 dropped significantly because essentially almost all of the physical expenses, the travel, the meals, et cetera, were not being incurred. It was just the honoraria expense being incurred in 2020, obviously due to COVID. So next year, I know we're already halfway through the year, but for 2021, if we get back into full-on operations and if things go back to the norm, we're obviously expecting to see that number creep up again. So we're seeing right now, again, that if 2021 was to be similar to 2020, you're going to have a 2.8 million roughly of expenses, but you're not going to have 3.2 million of revenue. You're going to have, I believe we said it's about 2.5 million of revenue and a loss of $750,000. So that really is really grasping and understanding that the one-time reduction you guys had has that effect of reducing your overall surplus by $750,000 to $800,000, and therefore you would have to carefully evaluate if we were to do that again in 2022. That could be another $800,000 we're going to lose, and you don't want to go too far down that road where you're eroding into your built-up surpluses. Any questions on that aspect, just to make sure that everyone sort of got that before I talk about the numbers on this page again?
Seeing one from Samir. Go ahead, Samir.
Malcolm, it's great to see all this number, and it's definitely an eye opener for next year for sure. I have a question on one of the expenditure. It says general office expense 279,021.
Yep.
When I saw it first, I thought maybe the rent and stuff like that also is part of it, but I see a rent also as an expense. Similar revenue, I would say premise rent is about 228, and the office expense is 279.
Mm-hmm.
So what's included into that general office expenses? What piece is there?
So there are a number of pieces in there. So it is one of the larger categories, as you pointed out. So there's a number of items, but some of the major items in there are the credit card fees. So now that back in the day, I know members paid differently, checks and blah, blah, but obviously in the last few years, it's now a fully online system. So everyone is paying by credit card. The college has to, of course, eat the Moneris fee based on the various rates charged. So that is a significant component of the general expense. It also has the other various just regular, as it implies, general office expenses. So supplies, etc. in the office, postage, printing, whatever. There's a few other things. Strategic initiatives is in there as well. So it's sort of a category which does have various other components to it. But I'm, as I said, I was going to sort of run through these numbers, not with every line, but thank you for pointing that out, because that would have been one of the numbers I wanted to talk about, given it's one of the larger ones. I'm just going to sort of go through the rest of the list here. Amortization is obviously exactly that, just amortization on the capital assets. I'm only picking some of the larger ones for explanatory purposes. The council and committee I did want to comment on, which I kind of did already, but the reason for the decrease there, as you'll also see on the last page, is this is essentially sort of honoraria only for 2020, whereas it's always been honoraria plus the committee expenses. So there's been a natural decrease in that in 2020 due to COVID. The external personnel decrease is tied into the decrease, just highlighting it up here. So we have a decrease in exam fees, again, naturally due to the running of only one set of exams in 2020 versus 2. So a proportionate decrease of the revenue brought in, but as well as the expenses incurred against that. The legals, which is always a fairly large, or could be a fairly large number. The legal expenses, as you see, are down. And again, there isn't always pure consistency between how legals are incurred. It's a factor of what cases come up, the number of discipline cases or UPCs or what have you. In general terms, I can comment that 2019 still had a significantly higher amount, as there was still the final legal costs related to the past Clearly matter, which then ended in 2019. So as far as what this number could be in 2021, it's certainly not easily predictable. So that's why you guys always want to have a fairly healthy reserve, because you just want to be prepared for any eventuality that may come up with the legals. But for this year, we'll call it a good thing, which it is that the legals were down and there was nothing to this level of expenditure earned in 2020. The premises rent is another large component, but it's obviously very consistent based on the the lease at the current location, and as well our salaries and benefits for the staff. So that's basically what drives the 400,000, just under of excess of revenue over expenditures for this year. I'm going to go down.
So, Malcolm, can you go right back up again? Just for a second.
Yeah.
One thing I want to point out here is the temporary nature of the 395. It would, this, if you considered this in isolation, it would look or make you think that you had your best year ever in a COVID year. But let's just, again, I'm going to keep on harping on about this. But this income statement does not reflect a reduction in revenue, but it does reflect a reduction in certain expenses. So you've got a mismatching in terms of the timing of the impact on your financial statements today. So your revenue is going to be 800,000 lower. So even though, because of a quirk of accrual accounting, we're not recognizing that the fact that your income statement is $800,000 worse off. But we are recognizing the fact that your council and committee expenditures are reduced. So where that might not be consistent going forward, your legal expenses are reduced. Whereas what Malcolm mentioned, legal expenses are typically lumpy depending on whether or not you are going through a case. Now, it just so happens that in 2020, there was lower expenditures than in 2019, and maybe even 2018. I can't quite remember the historics. But the point is, if you were to consider this on a normalized basis, you are showing lower expenses and higher revenue than what you're going to expect next year, probably. So the point here is, on the face of it today, 400,000 looks like a good year. The truth is, it is not truly reflective of the impact of the environment in which the college is operating today. Okay, it's very important that we always keep this in mind as we go through this conversation. I'm going to bore you to tears by repeating this over and over, so I do apologize. Carry on, Malcolm.
Malcolm, before you continue, Samir, did you have a quick question, follow-up?
Yes. I have another question when I speak about premises rent. For the 2019, we had 224, and for 2020, we had 228. Now, I'm just wondering, like, weren't we qualified, or did we not apply for our subsidized rent due to the COVID, or how did that scenario go into that?
So basically, there were two programs that the college could qualify for. So one was the wage subsidy, which would be a rebate offered by the government relative to salaries and benefits over here, which, as you see, has not been the case, and I'm going to explain why in a second. And there was a second one for the rent subsidy, which, again, as you pointed out, we don't see a decrease here. So the reason we don't see a decrease is the reason to qualify for these subsidies. The main criteria is there has to be a loss of revenue, and it kind of circles back to everything we've talked about to this point, which is for the operation year 2020. There has been no loss of revenue, $3 million versus 2.9. The college has not met the criteria to qualify for any subsidy. Moving forward, where we are right now, literally what I'm currently working with VISA is we now know for 2021, the college has a 25% decrease in revenue, which means for any period in 2021, it would qualify for both the payroll subsidy right here, and as well as the premises rent subsidy. And so those applications are being worked on now, coordinating with VISA. And so there will be rebates which are being applied for, and then once received, would be reflected in the 2021 financial statements.
Thank you, Malcolm.
No
Thanks,
problem.
Malcolm. Stephen, last question, and then we'll pass it back to Malcolm.
Malcolm, under the line of investigator, do you think going forward into the future, to get a handle on that cost, because it keeps rising every year, would it be good to bring it in-house to have fixed costs then, and just pay a flat salary for an investigator, or still continue to contract it out?
That is so again, as the auditor, we are looking at the expenditure and verifying that it either matches to an expense or to an invoice, etc. As to the terms of, is it cost feasible to do it alternatively? I would have to throw it to perhaps Fazal to answer that.
Sure. I might actually tag team this with Amy, as she's also quite close to the investigations. But there have been some very complex cases where we've needed very qualified investigators for, especially insurance fraud cases, where we're reviewing files and going off-site for these things. So there are some challenges as far as getting the right talent at the right time in-house. So we try to do quite a bit with internal team as far as basic screenings and initial investigations. But there are some pretty complex investigations that we've had in the past that we've had to outsource. Amy, maybe I can get you to follow up.
Sure. I think you've covered most of it. The biggest distinction is between investigations that can be done sort of from the office by making inquiries, phone calls, that kind of thing, versus investigations that require someone to attend on the site. So what our practice has been that where a site visit is required, we retain an external investigator because they have people that are trained to hand deliver the notice of investigation and to deal with all of the potential concerns and things that can arise that come with site visits that require a specific kind of training and a specific kind of knowledge to make sure that they're doing so properly and keeping everyone safe in the process.
Thank you.
All right, excellent. So I'm going to roll down to the next page, which is basically the net assets. We've kind of already touched on this. So the number here that we're really highlighting is this 4.4 million. So the college, again, over the history of time, has built up surpluses, including this year's 395 that we just saw on the previous page. And this 4.4 million is where you guys are right now. And I'm going to talk about that a little further again in a couple of minutes. Rolling down, I'm not really going to talk about this schedule. This is really just cash flows. It adds no value, no further discussion to all the numbers we've talked about. This is just an accounting of how the cash at the beginning of the year reconciles to the cash at the end, given the various payments and receipts going in and out. It's honestly very dry accounting stuff. It is part of an audit, but it's not something that really drives any additional value from your side. So moving on to the notes, again, I'm not going to read through every single one, but just talks about the basic operations of the college, the significant accounting policies, the way capital assets are depreciated, etc. I'm going to pause on note 3, which is a fairly key note, and not surprisingly, we come back to the number that we've been talking about the whole time, which is this 4.4 million. So where the college is at the end of December 2020 is it has overall surpluses of 4.4 million, which have presently in draft form been allocated in this manner. So these allocations, as you can see, are yet to be finalized. They will be finalized not by us, but by the board. You all will be making the decision as to how you wish to do that. But these are the various contingencies that have previously been set up: the operating, UPC, premises, strategic initiatives, etc., and the general. So my comment here is to speak on, I guess, our recurring theme of when you guys have reduced revenue and how it's going to impact you in the future. It's coming from this 4.4 million, right? So when you being the college has a projected loss of, let's call it $700,000 to $800,000 in 2021. That's what we foresee given consistent expenses and the reduced income. That number is going to come off here. So at the end of 2021, all other things being equal, you're going to be down at about 3.6 million. Hypothetically, if you opted to have a fee decrease again in 2022, and again have another loss of, let's say, 800,000, you're now going to be down to under 3 million by the end of that. So although the income reduction, I understand the reasons why, and it helps the members and all of that is great. You do have to balance it with the fact that anytime we offer this fee reduction, and just going back up here, I'm just going to jump for a second, bear with me. So if we're projecting over here that next year, if there was a 2021 column, we're going to lose $800,000. And in a normal year, we have a surplus of about 260. That's $1 million swing between either making 260 or losing potentially between 800 to $1 million. So we want to just show that there is a timeline coming back here, that every time the college takes a loss, as it will in 2021, at a recovery rate of, let's call it 250,000 a year, there's going to be a minimum 3 years before the college is back to where it would be prior to 2021, if that makes sense in how I'm explaining it. So if you guys were to have a reduction again in 2022, you could now be looking at 6 years before you get back there. So it's a very careful thing to understand and make that decision before you do. I think Fazal has a comment.
Yeah. So again, just to summarize, in any given standard year, you're between 200 to 250,000 of surplus. If in any given year you lose 800,000 in revenue, that surplus turns into a deficit in that year for approximately $500,000. But it would take you another 3 years to recover for each 3 to 4 years to recover for each time you give this discount, all else equal. That's assuming no other cost initiatives to reduce cost, right? If all else equal, you just reduce revenue, there's a 3-year return to get to the previous reserve level.
And
on top of that, if you were to play it through at 500,000 negative each year, because you're at, or just over 500,000, within 8 to 9 years, this reserve would be fully depleted. So there would be no surplus at all, and you'd be operating in a deficit. Now, 8 years is obviously unrealistic, but the point is, that 25% can't be the new base where you start increasing from again. You need to revert back to normal or some level of normal. You can't keep the 75% as the baseline without having either a cost initiative, cost control initiative, or you got to return back to, or a more aggressive return back to stable revenue, historic 2020 revenue levels. Okay.
If I can just also point out one thing, while we're on the screen here, that loss that we have planned for, that comes out of general reserves. So that 1.3, we expect to go down by 800,000. We're going to be at about 500,000.
Oh,
if we do a second year of subsidy, another 800,000 loss, we'll wipe out the 500 that's remaining, and then we start eating into other contingency funds. So if we decide we want to offer another 25% reduction, it not only will wipe out general reserves, but now we're going to start picking at other reserves that we had purposely put aside, such as operating reserve, which guarantees that we have 6 months. By policy, we have dictated we need 6 months in the bank to operate the college in case of anything. So we would have to make some hard choices as to what do we want. We have money in the bank. We would have to start accessing contingency funds put away for other reasons.
Thank
you, Fazal. Murray, did you have a quick question before we pass it back to Malcolm?
It's more of a comment, and it's beneficial to be reminded of this impending deficit and the impact it's going to have on our financials. And I do recall having this conversation when we were negotiating the reduction in the fees and the impact that it would have on the reserves. So other than a reminder that this is impending, I don't think it's new news to us.
No, probably not. I mean, we weren't part of those discussions. You're right, it's probably not new news. The one thing that's good right now is so that we're talking about it in real time. We're talking about it from the perspective of understanding the impact on the financial statements. So I'm being bombed. This is COVID. There you go, COVID life. Yeah, no, what we're seeing here really is we're trying to emphasize the impact as it relates to the most recent financials and what that is going to look like going forward if you continue along this path.
Yeah, so I think just to put a final comment on this arching conversation is exactly what Fazal said, which is, although there's 4.5 million here, we being yourselves shouldn't really be looking at it as, well, if we keep going down by 800,000 every year, well, that's 3.5 to 4.5 years or whatever the math says, that will still be fine. Because really you want to be focusing on this number because that's really your general reserve. So after that, you would have to eat into other reserves, which you could do, but would not be that financially prudent. So this 1.3 million you want to retain as your 6 months operating, the UPC, et cetera, you want to have, because you never know when there could be a big UPC case that has to be dealt with, et cetera. So really for 2021, it's a done deal and it was planned and it worked well. But for 2022, if it was repeated, it would not come out of only the general reserve. You would have to eat into one of these other ones as well. So if that's a choice you'll make, you're obviously welcome to do that. But as long as it's a board informed decision, it's all that we are driving there. So that said, I'll move past the 4.5 million. The rest of the notes are just explanatory, explaining the short-term investments held in BMO, various interest rates, what have you, capital assets, a bank indebtedness, which is a facility, but it's not used by the college because clearly you guys have cash surpluses and don't need to use debt financing. More generic notes, just the commitments, talk about the premises commitments in the lease you're currently at, and the the new standard COVID note, which we have to put in for all of our audits now, which again just talks about clearly every board and management is aware of COVID and is making efforts to make sure that their operations are being maintained in light of COVID and in a financially responsible manner. The very last page, again, highlights what we've already looked at. So we saw this number earlier on the main income statement. So my comment here is just to sort of show why these two are down, why 130 is down so much from 229. It's because there has been significantly lower expenses as fully expected. So the honoraria didn't really change because you guys still met and all the committees had their usual slate of meetings in the year, but the number of physical meetings went down to none. And so there was none of the travel accommodation, et cetera, that goes with it. So all that said, I think that was fairly comprehensive. And I know we paused and spoke at different times, but if there's any other questions, general or specific, we're happy to address.
Any final questions? Samir?
Malcolm, going back to, I'm gonna ask you the same question, but now this time I'm looking for different things. When we talk about the COVID subsidized rent and salaries and stuff like that, what's your take on, what do you think, how much college would save in that, like in terms of the percentage wise, like what percentage reduction do you think we should see on the report next year?
So at this time, I can't really give an answer to you're going to get this dollar amount because there's various periods you apply for, and we are actually just gathering the information right now. So we are still in that application process. So I unfortunately I can't really say whether it's going to be you're going to save 5,000 or you're going to save 500,000. It's certainly not going to be 500,000, but no. There's going to be a number which at this point I honestly can't say, unfortunately, just because there are many factors that go into that calculation, and it's not just here's your payroll and your rent was down 25%, so you get 25% rebated. It's much more complex. It breaks down by number of employees. There are internal maximums, etc. So I would say, just in a general sense, this is obviously one time in terms of what the government is doing, and it's something that the college is entitled to. So it's certainly where we are claiming it for the college, but we're probably looking, and again, I almost hate to throw a number out because then it sticks, but we're probably looking at maybe the tens of thousands of dollars, certainly not hundreds of thousands of dollars in rebates. So that it would be a nice supplement, but it's by no means going to make a significant dent in the 700 to 800,000 loss the college will be taking in 2021.
Great. Thanks, Malcolm. And just looking at the clock and mindful of the agenda, if there's no more questions, I'll pass it to Brian.
Thanks very much, Sarah. I'm going to ask for a motion at this particular time to approve the audit reports. I'd like to have a motion. I think I'll name Samir as
Yeah,
the
you can count
motioner
on me.
that,
You can count on me.
because I missed you last time, and we'll have a seconder on that if we could, please.
Yes, thank you, Mal.
Ingrid, I see
problem.
Ingrid has hands up as a seconder. All in favor? Hands up. That's passed. I wanted to make one comment before our guests left. On behalf of the board, I did ask for a COVID discount for our accounting fees, and I still haven't heard anything from them. So we'll just keep that in the wings.
Great. Well, thank you to Adam and Malcolm for the presentation. So for the rest of the folks, we're going to be moving on to a short break. Just a reminder to mute yourselves, turn your videos off during the break time. We'll do a screen share, and then just a reminder when you return about the live stream. Are we still going to take a 15-minute break, do we think, Fazal?
Thank you, everybody. Thanks for having us.
I'll leave that to
Thanks,
the
Adam.
boss.
All right,
Well-
thanks, guys. We'll log off.
Thank you, guys.
All the best.
Can we
Yep.
maybe shave that and to keep my character, could we shave that to 10 minutes?
See thumbs up from folks or thumbs down? Okay, I'm seeing some thumbs up. So why don't we do 10 minutes then?
Thanks very much, Sarah.
Thank you.
Okay, so we'll see you in 10. Okay, welcome back everyone from break. I think we all needed a little stretch. I'm going to jump straight back into business because I know we are running a little bit behind from the earlier presentations and some of our technical challenges. So we'll jump right back in and try to get folks to lunch on time. Amy, I'm going to pass the floor to you and render Amy Stein, the acting deputy registrar, who's going to take us through the strategic work plan.
Thanks, Sarah. Hi, everyone. So as the board is aware, you have a policy in place under which we sketch out a work plan for the year in order to make sure that we're staying on track for accomplishing what we've set out to do in our strategic plan. So you last saw this map at your meeting in December, where we were able to bring forward the proposed map for the year. And we let you know that, of course, this was tentative and that things do tend to get moved around a bit as we go. So we're bringing it back to you now for a mid-year check-in, and what you're seeing in front of you are showing, from February to May in green, what's been complete, in red, what's not been complete, and where that's the case, there's generally a note indicating why or where it's been moved to, and in blue, anything that's been added to the work plan as we've gone. So we are bringing it forward now so you can see how things have played out so far and what our forecast is looking like for the October and December board meetings. We are still on track to get everything done that we've set out to do. And of course, there have been a number of things that have been added as we've gone. So I am simply going to turn it over to the board for any questions, anything that you'd like some more elaboration or information on this work plan.
Great. Questions or feedback or comments for Amy? Not seeing anyone. I scared everyone by saying we might be late for lunch.
Or it's because Amy did such a great job.
Okay, well, with that, I see Samir has a hand.
No, it's more of a comment. It's actually great to see what new things are added into the action plan, and looking forward to achieve this year. Definitely, it's great.
Good, thanks, Samir. Okay, so we'll do a show of a high five for consensus that folks feel comfortable moving forward with a motion on the strategic plan. Let's see, okay, I'm seeing consensus across the board, so I'll pass it to you, Brian.
Thanks very much, Sarah. So I'm going to call for a motion on this. The motion will read to approve the revised 2021 strategic work plan agenda. I need a mover.
So moved.
So moved, Henry. Need a seconder.
Second.
I heard Murray. All in favor? Thank you very much. Passed.
Okay, so we're going to move on to the monitoring reports with Fazal Khan, the registrar and CEO. Go ahead, Fazal.
Thank you. So there's three monitoring reports that I'll be presenting. They're all in your package, your meeting package, and this is in line with our new governance strategy where we're putting out monitoring reports periodically during the year, and the board is required to do two things. One is to motion that they accept the way it's being interpreted, the policy is being interpreted, and the second is to actually accept the report as presented. So we'll be doing this basically 3 times. There's 3 reports that I'll be presenting, and we'll be going through the same procedure on each one. So the first one is the financial condition policy monitoring report. Now, a lot of the numbers that are contained in this report are numbers that you've seen just recently in our variance report that FISA gave, as well as the audited financials that Malcolm and Adam had presented to us. So I'm just going to start from the top with financial position and just point out a few highlights. So as we just saw in the last presentation, we had a surplus ending for 2020 in the amount of about $395,000. And at the time for timing, assets at the end of December 31st were $6,800,000. That basically includes revenues that were collected in 2020 at the end of 2020, which were actually 2021's revenue because we collect our registration fees in advance. Under expenditure, there's a note about the fact that we are liquid and that the board approved the use of $817,000 thereabouts to subsidize the fees reduction for our registrants. And there's another note in there that says that basically there were no major unbudgeted spending in 2020 and total expenditures were under budget by about 12%. And that's really due to the fact that the board wasn't traveling in for board meetings. Under debt, no funds were borrowed. Reserve funds, reserves were not accessed in 2020. They will be accessed in 2021 to subsidize the fee reduction that we've given this year. Under payments and receivables, vendor payments, payroll, board expenses, source deductions, HST, all in accordance with 30-day payment schedules. We've moved mostly to EFTs. I can say, and Melanie had started the ball rolling, and FISA has definitely brought us up to speed that the college has successfully migrated 75% of our vendors and 100% of our staff and board to EFT payments, which has come in very helpful, especially as we're operating remote during the pandemic. And finally, under reporting, as we always do, the finance committee is, which is the executive committee, is brought up to speed with financial updates every quarter, and so is the board. So that, in a nutshell, is the monitoring report, financial condition monitoring report. And I guess I will turn it back to Brian to seek any questions, and if not, move it.
Yes, thanks very much, Fazal. Are there any questions to the report that Fazal has presented?
Yeah, and I'll just remind, I think Fazal gave some good context that really we're looking at, was the registrar's interpretation of the policy reasonable, and did the registrar comply with the policy as reasonably interpreted? So any feedback or concerns with the registrar's interpretation? Or any steps taken that people were uncomfortable with? Diana, I'm seeing your hand.
Great job. Looks to me like you did what you were setting out to do, and great report.
Thank you, Diana. That all credit goes to the team.
Okay. So if there's no other questions or comments, we can move to a high five for consensus to move to a motion. And just not sure if I saw Netta and Ingrid. I may have missed your hands, but okay, perfect. Okay, so I'll pass to you, Brian, for motion.
Thanks, Sarah. So there are actually going to be two separate motions on this particular item, as there will be with the other ones following. The first motion is going to be called that the board approve that the registrar's interpretation of the policy was reasonable. I need a mover. Netta. Thank you, Netta. Omar seconded. Yeah. Thank you. All in favor, hands up. Unanimous passed. Thank you very much. Second motion is going to be reading that the board agrees that the registrar CEO complied with the policy. I need a mover. That's Murray. Seconder.
Steve.
Steve, all in favor, hands up. It's passed. Thank you very much.
Okay, so I'm going to pass it back to Fazal for the vendor relations policy monitoring report.
Perfect. Okay, so 7.2, I'll do the same format. I'll give you some highlights from the interpretation column, and then we'll take questions and go from there. So this is, and I should have prefaced the other report as well. This report basically covers from November 2018 to May of 2021, the most current. So a couple of things. This is a relatively new policy for us. So under the procurement framework, during the period between November 2018 and May 2021, we have sought at least 3 quotes for any initiatives that were between 25,000 and just under 50,000. So initiatives would include in these columns diversity training, financial audit firms, PPE providers, governance consultants, polling services, and any type of staff and board training. During the period January 2018 to December 2020, we engaged with 1 consultant that was over the 50,000 threshold, and at least 4 vendors were identified as being competitive leaders in that field. So we went a little bit over on getting extra quotes. The project was approved by the board as part of the 2020 budget, and we've been giving regular updates to the finance committee and the board on that project. Under conflict of interest protection, I'll just highlight that managers are always responsible for initially sourcing quotes and proposals for any departmental initiatives and then presenting them for approval. Then all those quotes and proposals are reviewed by legal counsel and the deputy registrar or the registrar to ensure that the vendor is not in conflict of interest. Under contract review, supply services contracts are reviewed periodically. We get feedback from college staff to ensure that the contractual obligations of the vendors are being met. Any contracts for these vendors, again, are looked at by in-house legal prior to execution. With prospective vendors, confidentiality of information regarding quotes and competitive knowledge, proprietary products, services is not shared with other vendors. And if we are looking for references, we first seek permission of the vendor before we contact any of their references. Jumping down to vendor payments, again, I reiterated in the last report, vendor payments are all within contractual obligations, and 75% of the suppliers we've set up on direct deposit. And EFTs are processed weekly, and check runs are done every 2 weeks. So we're pretty much keeping on top of everything for time. So that basically is the vendor relations policy.
Okay, thank you, Fazal. So a reminder that the 2 questions for the board are really, was the registrar's interpretation of the policy reasonable? And did the registrar comply with the policy as reasonably interpreted? So any feedback or concerns from folks with relation to the interpretation of vendor relations? Yeah, go ahead, Murray. Or sorry, Henry.
Yeah, Fazal, I'm just curious. The answer might be in what you've already said, but when you do your quotes for tenders for projects and what have you, is the diversity thing dealt with or really analyzed well, as opposed, or is it just that you go with the lowest number in terms of dollars and cents?
Typically, we don't necessarily aim for the cheapest or the lowest quote. We do look at a number of factors, including more so lately as we've gotten training in it, the diversity piece. So, I think that's a big function. Reputation, dependability. We check in with other regulators as well to make sure that they're delivering on time and to scope. So there's a number of things that we look at, and we obviously are looking at the bottom line, and rarely do we ever hit the highest, but we don't necessarily hit the lowest either. It's the most suitable. So thank you for that question, Henry.
Brian, question from you?
Yeah, Fazal, this is perhaps dovetails with Samir's question on general reserves in the previous accounting report. Do we have a number on how much it is costing us for vendor fees as far as using credit card methods in which we, before it was differently done?
So as far as our sort of credit card commission that we're paying? So we review and sort of negotiate and push the bank a little bit every couple of years. So I think we're down at 1.5% thereabouts. I'd have to check and check with accounting to see the exact amount, but we're constantly nudging for the best or the least fee as possible.
Great, thank you very much.
Any other comments or concerns? Okay, so we'll move to a show for consensus to move forward with a motion. So show of hands, if you feel comfortable moving to a motion. Okay, it looks like everyone. So I'll pass it to you, Brian, for those two motions.
Thanks, Sarah. So the first motion will read that the board approve the registrar's interpretation of the policy was reasonable.
I see Ingrid.
Second.
Elsa?
And Elsa. And Brian, you're just muted.
Sorry, I saw Ingrid's hand up and Diana's, sorry. All in favor? Passed. Thank you very much. Second motion, and I'll get to the ones that I missed last time. The moment that the board agrees that the registrar CEO complied with the policy. I believe, Elsa, you had your hand up. And a seconder. Ingrid. All in favor? Passed. Thank you very much.
Okay, so we'll move back to Fazal with the relationship with the public and COO beneficiaries monitoring report.
Okay, perfect. And again, this is another new policy that was instituted by the governance reforms that we've undertaken at the board level. So this again runs from December 2018 to May 2021, and I'll again point out sort of highlights. So under the first box, engagement with the public is consistent with the RHPA. From December 2018 to May 2021, things like proposed bylaw amendments were circulated for stakeholder feedback on 4 occasions. Additionally, stakeholder feedback was also sought on a number of occasions where it was not actually required by law. The board has been pushing harder to engage the registrants and the public. So we have gone ahead and circulated things for input even when it wasn't required. These initiatives included, for instance, proposed changes to the quality assurance program, bylaw amendments regarding governance reform. In 2019, we had a significant update to the standards of practice guidelines. So those were also including updates about remote dispensing. So those were circulated. In addition, not only they were circulated to the registrants, but we also checked in with the Citizens Advisory Group to get a bit of a public perspective. Most recently, the delegation standard was circulated for stakeholder feedback in October of 2020. So we are going above and beyond what's legislated in the hopes of having better engagement and more transparency. As far as organizational environment being professional and safe, all feedback surveys are conducted anonymously. Since 2016, the college's website is featured a Contact Us portal for patients and registrants to message in for practice advice. Additionally, the CO website was updated in 2020 and now includes a website survey permanently for members of the public or other users to, on an anonymous basis, give their experience on our website. As far as the organization ensuring a culture that's reflective of a commitment to providing fair and transparent, prompt and timely and courteous service, I'm quite pleased to say that the college developed a formal style guide in 2019 to formalize our standards for customer service, ensuring that we were consistent, relational, timely, and transparent. More on this relational part, all staff have received training in relational writing and communication, and a consultant was engaged to conduct a relational audit of the college to ensure, sorry about all the paper rustling, that everything is professional, relational, and easy to understand. So that concept of a relational, we started looking at back in 2015 to make sure that any of our communications were understandable. They weren't laden with heavy legal language. They weren't sort of threatening or aggressive. And so we've actually incorporated that, and we do that training in intervals to make sure that our form letters, all of these things reflect that relational approach. Jumping down to the second last box, reasonable plans to ensure that persons may use French in dealing with the college. So again, a lot of strides in this area. The college has made all applications and policies and materials for students, interns, and opticians available in French. So that was our first focus, that anything that people are accessing frequently is translated properly in French, not a Google Translate, but an authentic translation. The other thing is also the website has been updated, and we have created a hub so that you have two ways of finding French content on the website in the regular section, but also you can go to, or you'll be able to go to a hub that has all our French documents amalgamated in one spot. The nice thing also is in January of 2021, the college held its first French language exam at La Cité College in Ottawa. And as well, candidates are provided access to the PLAR and CGA process in French when requested. So those are the highlights of this report. All the reports are in front of you. Happy to take any questions.
Okay, I see one from Omar. Go ahead, Omar, and then Stephen.
Great, Fazal, for such a comprehensive input there. Fazal, I noticed you mentioned that all feedbacks you're posted on the website for feedback from stakeholders, including to get from public perspective as well. My question is, how participatory, how meaningful, and how engaged were the feedback?
We received a lot of feedback. Like for a short period, we had just launched the survey on the website about user experience, interfacing with our website. And I think in a very short period, about 4 or 5 months, I think we received maybe 900 comments. So we're getting really good traction on it. And then we took those comments and we actually did a sort of a rolling relaunch of the website. We've actually been changing up how information is grouped or accessed as soon as that feedback was received. So it was very meaningful feedback, and we've also acted on it immediately.
Okay, Stephen.
Thank you. I just wanted to further to Omar's comments. I just wanted to thank everyone that is participating in surveys and providing feedback back to the administration staff, and just to let the people out there know that your ideas do go to the administration, who do bring them to the board, and they do act on them. It's not just filling out a survey just because. And it's very important that you continue to provide feedback and complete these surveys, and to continue to monitor the social media program as well. Just doing a very good job. Thank you.
Thank you, Stephen. That's very true.
Okay, any other feedback or concerns with respect to the registrar's interpretation? Okay, any steps that were taken that anyone's uncomfortable with? Okay, I'm not seeing any, so we'll move to a show of consensus before a motion. Okay, and that looks like everyone. So I'll pass to you, Brian, for the motions.
Thanks very much, Sarah. So the motion will read that the board approved that the registrar's interpretation of the policy was reasonable. I need a mover.
Omar.
Omar, seconder. I'll second it. How's that? All in favor? Passed. Thank you. Second motion will read that the board agrees that the registrar CEO complied with the policy. I need a mover.
Steve.
Steve, thank you, Steve. Diana, I see your hand up. Seconder, all in favor? Unanimous, passed. Thank you.
Great, thank you. So we're going to move on to the board policy monitoring, and I will invite Ingrid to take us through that report. Go ahead, Ingrid.
In 10 minutes before lunch.
That's right, and we're right on time.
So policy 424, called the board policy development, was approved on October 5th, 2020. The reason for the policy was to set out a way of developing, approving, updating, and evaluating the success of the governance policy. We, the board, approved the monitoring of 8 policies in more detail under section 8B of policy 424. To develop informed, engaged, and meaningful direction is the reason for this governance process. The board's strategic agenda work plan is the second up for review, which is you'll see as Appendix A. My report is Appendix B. And I asked for the work plans for May and December to be attached, which are C and D. Now, I didn't get the minutes attached that I refer to. And there's going to be conversation on the meeting tomorrow as to the archival information. So if anybody wants to see the minutes, I have them. I could share my screen, or you could just take my word for it that what I'm pointing to actually exists. So in public interest, strong governance will ensure that the college is doing its due diligence to plan and oversight and identify and analyze potential risks that may impact the college negatively. In a DEI lens, the board should consider if this report is consistent with the college's values of DEI. So the recommendations will be that the board strategic agenda work plan is successful. So I'm going to go to my report, which is Appendix B, and I'll just briefly read. So number one, it's the responsibility of the board to lead its strategic governance goals, and as well as the agenda for regular board meetings. The board will discuss this plan in December, and it's reviewed, and at the board meeting in May, again, it would be revisited. So did the board's interpretation of the policy criteria, was it fulfilled? Well, it is fulfilled if it adheres to policy 421, paragraph 2, which reads, the board is responsible for leading its own strategic governance goals and agenda as the agenda for regular board meetings. The board will discuss this plan in its December regular board meetings for approval for the following year. In May, the board would again briefly revisit the plan to determine if any course corrections are needed. So the evidence I found was that starting December 2019, it was discussed, and it appears as item 10 in the minutes. So I have noted that it actually is there. In May, we talked about it again, and we added a July meeting. So there's actually 2 meetings last year where the plan was revised, and those appear as minutes in the minutes of number 11 and 9.1 for July. So did I see any deficiencies, or is there any recommendations? The one thing I did notice is that there appears to be a lot more black. Now, the next one kind of talks about the color coding and whatever, but black is a newly introduced items. And I think that sometimes by the year end, it appears it's hard to distinguish whether we've actually completed all the tasks we had set out to do, because there's a lot more black appearing. But that could be an oversight on color coding or whatever. But so I would say we are compliant with number 1, just that we have to be careful of how ambitious we set our goals in the year. So number 2 is talking about the color coding. So can we look as board members at this plan and easily see what we want to do for the year? And we have meet the criteria if we follow policy, paragraph number 5 of the policy, which states the annual board strategic agenda work plan will be recorded such that the board member can see at a glance the board work plan for the year. Specific board meeting agendas will be prepared in the context of the annual board strategic plan, strategic agenda work plan. So the color coding is the evidence that we have met the criteria. It appears that the December plan is black and the May plan is color coded. So initially when I looked through this, I thought, geez, there's a lot of new things added in December. Are these actually things that we didn't complete for the year that we've gone through, or are these things that we're adding to the year for May? And I had a little confusion on that. So although it may be clear to the people who are documenting it, and maybe you folks, I found maybe we were just partially compliant on that one. I would like to see in the December work plan complete color coding that we can identify what's been done. And in 2020 and 2019, the plans are all black. So hard for me to figure out what we've completed. On to number 3. So this is really good. Can we identify the board, like that the board is directing the work plan and what committees are bringing it forward? Is that visible to us? And we would meet the criteria if we follow 6 and 7 of the agenda. The committee can submit policy developments or monitoring report items to the agenda by submission to the chair or the chair via Registrar CEO. The chair, the executive committee will carefully consider these items and schedule them according to priority, themes, time, availability, and appropriateness. Number 7 says that the director can submit potential policy agenda topics to the chair or CEO. The chair will apply the same criteria determining scheduling on the agenda. So if we look at the work plan for May, which if you can move my screen to Appendix C and D, maybe C first. Yeah, there we go. So, yeah, you can see in the parentheses the committees that brought these things forward. So I think that's pretty evident that we've completed what we need to do because the committee has brought it forward. And then in the black, it says move to May. So that means, that item we've decided should be moved to the May meeting and it won't be presented. I think this must be the February one that we're looking at. But then if you go to December, there we go. So is that December? Sorry, I can't see it on my screen. No, that's October. Keep going. Here we go. So it's all black except for the 2 blue areas. So here I look and think, okay, what have we completed and what haven't we completed? What's new? What are we hoping to add for May? And so that's where the number 2 part of this report, I felt the color coding might be easier to meet for us to see. And number 3, because the committees are present, I suggested I didn't have any deficiencies or recommendations to that, and I thought we completed that, so I gave it a 3. Anybody have any questions on my findings?
Questions or comments for Ingrid? Okay.
Thank Henry.
Henry, go ahead.
Could we get the screen up again at 8:1? And okay, if you could keep going up to where your explanation is, Ingrid, keep going.
For May? Oh,
no, I want the written stuff. I want you to find out where it says what the colors represent.
Yes, that's number 2. Keep going. There we go. Yep.
No. Yeah, keep going up higher.
That's it.
No, keep going up, 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 up. More. Right. Oh, whoa. Stop. Right. Okay, well, I'm not seeing it there. Anyway, you can check it yourself. On one of them there, you have blue is added to the agenda, black is the original work, and then it says green twice. It's got a goof up there in terms of the colors.
Oh,
Okay, so it's just a typo. Where that little explanation is, you know what I'm talking about? Right, keep going. Keep going. More. No. Okay, slow. Oh, back up. Oh, right there. Okay, right, stop. Right there. Stop. The board work plan. Items completed in green font, red font, and then it says green font again.
oh, yes. That's the
Okay.
original policy. Yes.
Okay, so that's not a typo.
Well,
There's not supposed to be a black there? Well, there is a black. A
black
red?
is what's added,
And what? And the red?
is completed,
And what about blue?
not completed.
What about blue? There's no blue there.
Right. I never noticed that. Thank you.
It's just a minor thing.
Okay, any other questions for Ingrid's? Okay. And we don't need a motion to move forward on this one, but maybe we can just see a consensus with respect to Ingrid's recommendations.
I was wondering because there was a motion moved on the last report we reviewed. That is this something that we're deciding we don't need motions on anymore, or to keep with consistency, should we motion it?
Amy, maybe I'll point that to you.
I think the reason for the motions on the registrar's monitoring reports was so that you have a record for that when the board reviews those later with a view to how they're going to inform the performance evaluation.
No, I was speaking of, sorry, Amy, of
Sure.
the last review of the, like, when we reviewed the policy, I think it was 425, last meeting, there was a motion made.
Okay, I would have to check on that. But we can certainly, if we want to be consistent, I have no concerns if the board wishes to put a motion forward here as well.
My thought is with motions, that we tend to take a little bit more ownership perhaps to the direction we've decided, or that this report is complete. I'm just looking here. So item 7 in our February meeting, when Mike reviewed the board policy 425, there was a motion made. So that was my question.
Yeah. I will turn that back over to Sarah just to gauge the room on if the board would like to proceed in the same manner this time.
Sure. And Stephen, did you have something to add on to that before I do that?
Yeah, I just wanted to thank Ingrid very much for doing this report. It's very time consuming. I can assure the rest of the board members, and I think she did an excellent job.
Yeah.
So it looked like we got consensus on the recommendations. Maybe I'll see a show of consensus to move forward with a motion on this item as well. And remember, 4 and 5 are that you are good to go ahead, and anything below is not. Okay, so it looks like there is consensus to have a motion. Amy, do you have some quick wording perhaps for Brian, or?
Sure. The motion might be to accept the monitoring report as presented.
Thanks, Amy. I'll call for that motion. Then I see Henry's hand up. I need a seconder.
Okay, I saw Murray.
I saw Murray's hand up. All in favor? It's passed.
That's
Thank you.
everyone. Okay, and so that brings us to lunch, folks, and we did it on time. We shaved about 20 minutes off the agenda, so give yourselves an extra cookie with your lunch break. Again, we'll put the timer up. Reminder to mute yourselves, turn your video off, and then when you return, just a reminder of the live stream. We'll see you folks in an hour.
Thank you.
Hey, Steve.
Hi, Ingrid. Good job there this morning.
Oh, thank you.
It's not an easy task.
It sure is time consuming. All right. You got it.
Yeah, sure is.
I'm glad I chose one of the first two.
How's the vaccinations coming in Ottawa? Are they getting a lot of people done?
I guess so. We, of course, were able to go earlier, but
Yeah.
My partner, Rob, just went last week. He's 65, type 1 diabetic. He was a little frustrated that they were announcing that the younger people could go and he hadn't been vaccinated yet, but whatever. What are you going to do?
Yeah, I'm not, well, I turned 65 in September and I'm a type 2 diabetic, fully insulin dependent. So my pancreas doesn't work anymore. So yeah, I was able to get mine about, I guess about 2.5 weeks ago, I guess. So
I'm really surprised. So I'm a bit younger, and with nothing, but just my age, it was open, and I got it a month ago.
Yeah, it depends where you live, eh?
Yeah.
Folks, just a quick reminder that we're broadcasting live right now.
Oh, sorry.
All your health information shared.
We're vaccinated.
Yeah, we're vaccinated.
One shot.
A thumbs up.
Based on the conversation earlier today, I took the lunchtime and completed my census report.
Good for you.
Did you have the long one or the short one?
Oh, it was short, took less than 5 minutes.
Okay, so it looks like our countdown has ended. Do we have most folks back from lunch?
I think we do.
Looks like
Netta, and I think Diana's there. I'm not sure.
Do you want to give folks another minute, or should we
give them another 30 seconds or
Yeah.
so, then we can jump on. Diana, are you there or just no picture? Because she's presenting, isn't she?
She is. We do need Diana for the better portion of the agenda.
She headed for the hills.
Yeah, she bailed. Okay, Netta's on. Thank you, Netta.
So it looks like we're just waiting for Diana, but we do.
There she is.
Oh, there we go. Great. So welcome back, everyone. Hope you had a nice break. I heard some folks used it to complete their census and get other critical activities completed. So good use of time. We're going to hop back into things and jump into the agenda. We're going to have Diana taking us through a next couple of sessions, and this will be where we start to look at the public interest rationale for some of the decisions and policies that we speak about this afternoon. So with that, I'm going to pass it over to you, Diana Bristow, the Chair of Governance, to take us through the quarterly board policy review.
Thank you, Sarah. All right, there are 3 policies that on the board review schedule that are slated for evaluation. These are some of the first policies that were approved by the board when it began the process of adopting the policy governance approach and overhauling its governance manual in 2017. The first policy, the reserves policy 2-07, falls within the operational boundaries category. Policies in this category set out the board's risk boundaries for the COO's operation. The purpose of this policy is to ensure that the college has reasonable financial reserves in order to mitigate the impact of potential operating and financial risks to the organization in the future, which we just discussed earlier. The reserve funds serve as one of the means for mitigating these risks. The proposed revisions are minor to ensure that the policy language was consistent with the terminology used in the college's audited financial statements. Does anyone have any questions with regards to the new wording?
Any questions for Diana? Not seeing any. Can I get someone to identify what the public interest rationale might be for this decision? I see Stephen.
Yeah, Sarah, it would be so that the college has is financially stable and there's so it can function properly now and going into the future and not ending up like other organizations are doing so forth, like either in, if you looked into the province of Newfoundland, for example, the financial crisis that they're in, and universities here in Ontario, a couple of them are in terrible financial resources. And this establishes policy that I would think that the public can see that, well, you know what? Hey, they're looking after themselves. They're biding the times and fighting over the COVID, but also looking stronger to the future.
Okay, thank you, Stephen. Marie, did you have something to add to that?
No, I think Stephen covered it.
Super. Fazal, I saw your hand up as well. Anything to add?
Right, so I'm pausing myself. Yeah, it's, dovetailing with what Stephen said. Definitely, it would bolster public confidence that we have the reserve funds required to maintain operations and be able to transact complaints as they're received and investigate complaints as they're received, and to be able to continue to administer regulatory requirements to our registrants to ensure that the public's getting the best eye health care possible.
Okay, great. Okay, thank you for that. So we'll do a test of consensus that folks feel comfortable moving forward to a motion on this item. So again, you can show 5. Okay, looks good. So Brian, I will pass to you.
Thanks very much, Sarah. So the motion will read to approve the proposed amendments to the reserves policy as recommended by the governance committee. Can I have a mover on that? Murray. Thank you, Murray. Seconder. I saw someone. Oh, Ingrid. Thank you, Ingrid. All in favor? Hands up. Passed unanimous. Thank you.
Okay, so we'll pass it back to Diana to take us through the Human Resources and Relations Policy.
Thank you. Okay, so our second one we're reviewing is Human Relations Policy 2.08. This policy is designed to set out the risk boundaries related to employee relations, employment practices, and compensation. The policy also establishes the board's values with regard to the college's relationship with employers. The proposed provisions ensure that the language is clear and consistent with the terminology adopted by the COO. Does anyone have questions?
Questions for Diana on this piece? Okay. What about the public interest rationale for this policy?
Okay, Omar.
Yes. Oh,
Sorry, yeah. During the course of this review, do we recognize a need or greater need for, rather a need for greater public awareness and trust in the process of reviewing? Like, has there been any weaknesses in this regard?
with respect to this policy in particular, Omar?
Yeah.
Diana or Fazal?
I think I'll defer to Amy or Fazal on that to let us know if there's been any past issues.
I don't think there's been any incident that sparked anything. I think it's an ongoing aspiration for any regulatory body to maintain public trust and earn public trust and maintain it. And I think everything we're doing in our strategic plan is focused around one of those pillars. So I think this policy basically materializes it, going from a concept, it actually puts it in writing. So I think this is just another step in our strategic direction.
Set
If
up.
you scroll down to the wording. Oh, sorry.
No, go ahead, Diana.
Yeah, I was just going to say, if you want to show the wording there, there's a couple of changes. So, for example, the CEO shall not cause or allow conditions which are unfair. Well, unfair is subject to people's opinion of what's fair or unfair. So that wording's changed to unlawful, disrespectful, discriminatory, inequitable. I think that's a much clearer description. And then near the end, it also is added that for clarity, the policy does not apply to persons holding on-staff contract positions. So it just clarifies who it does relate to.
Okay, thank you, Diana. Can we get someone to identify what the public interest rationale might be for this one? How does that serve the public? Oh, Murray?
Yeah, I think it's important that the public know that as an agency, we treat our employees fairly, equitably, and compensate them at market value, and that everyone is treated with respect.
Okay. Great, thank you, Murray. Okay, so let's do a show of consensus to move forward with a motion on this one. Okay, so Brian, I will pass to you.
Thanks, Sarah. So this particular motion will read to approve the proposed amendments to the Human Resources and Relations Policy as recommended by the Governance Committee. I need a mover. I see Ingrid, seconder. Dorina, were you scratching your head or was that a high five? Okay, all in favor? Passed, thank you.
Okay, so back to Diana now for the board terms of reference policy.
All right, great. So we're moving on to 4.03. purpose of this policy is for the board to ensure that the college operates in a manner that is legal, ethical, and efficient, so that it fulfills its statutory mandate of regulating the profession of opticianry in the public interest. The proposed revised policy is streamlined to remove any redundancies between bylaws and the existing policy. The updated terms of reference provide more clarity, consistency, and guidance to adequately serve the board's needs. Did anyone have any questions on this? You'll note that it's not changed. It's a new draft.
Questions for Diana on this one? Okay, Diana, I'm not seeing any questions. Does anyone want to offer up the public interest rationale for this one? Maybe someone we haven't heard from yet. Okay, yep. Henry?
Basically, from what I understand, it tells us what we're supposed to be doing and that we're doing it right.
Okay, so it sort of guides the board's behavior.
Right.
Okay, anything else? Okay, so we can move to a show of consensus for this one, moving to a motion. Okay, good. So Brian, I will pass to you for a motion. Oh, I think you're on mute, Brian.
My apologies. Okay, so this particular motion is going to read as follows: to approve the template for monitoring the role of the board officer policy. Do I have a mover on that? Omar. Okay, seconder. I'm going to put Samir down because I know he was just itching to put his hand up, so I'm going to do that. All in favor? Passed. Thank you.
Okay, so we're going to move on now to the board policy monitoring templates with Diana again.
Actually, sorry, Diana. I might have made the wrong motion on the wrong part. I think I just motioned that, and my apologies. It should have been the reference policy.
Yes.
Okay, I apologize. Could we redo that motion then so that I can apply to the right?
It's a good catch, Brian. We missed.
Yeah, I did that on purpose.
That you said
I did
that.
it on purpose just to see if anybody was going to catch it or not. That's all.
Squeeze through. That's right.
Okay, if you don't mind, I'll indulge me and I'll do that policy, that motion again, if I could, to approve the updated board terms of reference policy as recommended by the governance committee. Perhaps we could just substitute the individuals that moved and seconded that last one and just redo it that way. Is that possible, Amy? No problem there.
Thanks, Brian.
Thank you. Pass then. Thank you.
Okay, so now we will move on to Diana with the board policy monitoring templates.
All right, great. On October 5th, 2020, the board approved the policy to development 4-24. The board requested that the board monitoring achievement report templates be created for each of the 8 policies to be under review for the next 2 years. And here for your review is a template in this series. The board officers policy 4-05 monitoring template. The template has been broken down into sections to make it easier for the chosen director to fill out the information. With respect to the last 2 columns, the board will be able to review and discuss any deficiencies and recommendations to determine how to achieve compliance with the policy. So I'd like to open this up for questions.
Okay, any questions on this piece? Not seeing any. Okay, so the big question is, would anyone like to volunteer?
Would you like to put that on the screen?
Sorry?
That's what I was going to suggest. To keep this screen up there until we finish the discussion.
Okay, see what you have to do. That's a good idea. Does anyone want to volunteer to be responsible for completing the report, and that would be presented at the next board meeting in October of 2021?
Sarah, I'm going to suggest, because I've been told I'm going to voluntold somebody if they don't volunteer.
Yes.
But I'm going to make a suggestion that this would be an opportunity, and it's not too onerous on anyone to do this. I would like to call on some of the new members of the council, of the board, to offer themselves to do this, because I think it's a good way of participating and getting your name in on some documentation on that. And I think it's going to be very helpful. So I'm just putting it out there for any new members. If not, I will pick one of you. So
I'm
take your poison.
Samir, it looks like you might be tentatively raising. Okay, it looks like Samir's hand is up, so we may have a volunteer.
Very good. I don't see anybody else. Well, thank you very much, Samir. That was nice of you to volunteer. And
I know you were going to name my.
I was going to nail you anyway, so.
I was ready for that.
Very good. Okay, Sarah, I don't know whether we're at the motion stage or not. If you wanted to ask any other.
We are. If that's good with everyone, then we can go ahead with the motion to approve, and we'll watch your wording on this one, Brian.
Well, that's you guys didn't catch it, so now I'm worried that you're falling asleep here. So this particular motion is going to read to approve the template for monitoring the role of the board officer's policy. Can I have a mover? I think I saw Netta's hand up, so I'm just telling her there. And a seconder. Steve, thank you very much, Steve. All in favor? Passed, unanimous. Thank you.
Everyone. Great. Okay, so back to Diana. We're going to be looking at the board policy development policy now.
Great, and that's up on the screen, so everyone can refer to it while we're chatting. The template again is broken down into sections, making it easy for the chosen director to fill out information. And I think it's fairly self-explanatory. Maybe we'll open the floor to questions.
Okay. Are there questions on this one here? Okay. So it doesn't look to be any questions. So we'll see if we can get another volunteer this time to complete the report and present at the next board meeting in December of 2021. And Brian will be tasked with volunteering again if we don't get.
I'm surveying the faces now to see what you pick. So
never make eye contact.
All of a sudden, everybody's screen went off. I'm not sure why, but
right.
Elsa,
Ingrid, could you maybe?
Sorry, I was going to ask Elsa. Would you be interested in doing this, Elsa?
Hey, Brian, I would be interested in doing this. However, I probably need some guidance with this.
Okay.
Staff will always support. That's never an issue.
So you can't get out of it that way. So.
Okay.
Well, thank you very much, Elsa. That was nice of you to volunteer on this. I'm glad we were able to get some of the new individuals on this. Sarah, do you want me to call for that motion, or do you have any other questions to ask?
No, it doesn't seem like there's any other questions. I don't see any hands, so we're okay to go ahead with the motion.
Thank you very much. Okay, this particular motion will read to approve the template for monitoring the board policy development policy. I need a mover. I see Diana, and then, no, Samir, you've had too many. I'm going to get somebody else now. Seconder. Omar. Thank you, Omar. All in favor? Passed. Thank you very much.
Okay, so then Brian, we're going to keep it with you to review the proposed bylaw amendments relating to registration fees for the next year.
Thank you very much. I'm going to have some piggyback help with Amy on this. If I stumble or miss on something, please chime in at this particular point if you could. So this is the proposed bylaw amendments, bylaw registration fees. First of all, again, from the Finance Committee, when we met, this was a recommendation. We've got, when we set the fees out, it's on a 5-year rotation. It happens that this particular due date is 2021. Now, the issue with that is the Finance Committee, we debated this, and we thought that perhaps it's not a good time to propose a 5-year stint from this particular year, because we're slowly coming out of pandemic, and it's hard to put numbers or to get correct information, perhaps with the unpredictability of this last year and this year. So what we had proposed, or what we are proposing, is that for the fees, we keep them the same as the 2021 fee without any 2.5% increase. In other words, make them stagnant, make them the same as what they were. And that way then next year we can relook at this 5-year plan, and hopefully we will have a bit more stability in what's going on in the world, so to speak, and go from there. That's the rationale for it as far as what the fees are. Keep in mind too, with what we had heard from the accountants and such, there would be a very drastic hit to the reserves if we did decide to go ahead and put another reduction of 25% on this particular coming year's registration fees. So I guess, Sarah, I'm going to ask if there is any questions for that rationale, first of all. And again, Amy, is there anything that I've missed on that particular subject?
That was a really good overview, Brian. I'll also turn it to Fazal to see if there's anything you wanted to add. I think this ties back to the presentation that we got from the auditors earlier, and just looking forward, just note that executive committee did spend a good amount of time on this in reviewing so that they can make a recommendation to this board. There is a proposed bylaw amendment that will accompany this. Bylaws relating to fees do need to be circulated for 60 days. So that's why that's attached. If the board does decide to go in a different direction other than what the Finance Committee is recommending today, I will do a sort of quick change in the background here and put forward the proposed bylaw amendment so that we could get that out for circulation ASAP.
Thanks, Amy. I see that Ingrid has a question, and then I'll pass to Fazal.
I was just wondering why in the 5.2 chart for annual registration fees, it says 968. And then if you look above it, in that little chart, it says the original fee is 992. So 968 plus tax isn't 992. I just don't know why those two numbers are different.
968 was from 2020. So that was the fee from 2020. 2021 would have been 992. That would have been 968 plus the standard 2.5% increase that had been applied for that fee schedule over the 5-year period.
Sorry, yes, I see that now, 2021. Yeah. And I was thinking we're back in 2020, sorry.
Yeah. Almost halfway through 2021. So for writing 2020 for the time being.
Everybody wants 2020 to be forgotten.
It's great. Diana, did you have a question before we move on to Fazal?
I was wondering the same thing as Ingrid, and I also wanted to say that, I'm just thinking that I'd be in favor of keeping the fees at the original amount, because people can apply for benefits through the government to assist them. And, I just think it's something that we could also consider, is keeping it at the original amount.
Okay. Fazal, did you want to add a piece there?
Just a couple of high points. So, what's in front of the board is typically we'd be presenting you with a 5-year table, since we transact this in 5-year increments. Finance Committee, we spoke about it at that level. One of the difficulties we're having in predicting revenue stream is the interruption to schools and the flow of candidates coming out of schools. So typically we're examining about 200 or so candidates every year. That was cut in half last year because only about 100 got through the schooling program. And then with the starts and stops of school that's going on still with the pandemic, we're still trying to gather data on what this year's projected graduates look like from the schools. We're working with NACOR. So That's why we don't have enough information to really forecast another 5 years right now. And so we're putting forward, just look at 1 year for now, because we need to establish fees for next year. And when we have more information, we could probably look at 5 years at that time. And then the other recommendation, obviously, is rather than maintaining the reduced amount, that was a one-time hit to our reserves for relief, go back to the 2021, rather than hike fees 2.5%, just as a middle ground, keep them at the 2021 rate. And that way we can get back at replenishing our reserves in the timeline that we were hoping to, which was about 3 years.
Other questions or feedback from folks? I see Stephen and then Peggy. Go ahead, Stephen.
Thanks, Sarah. I just wanted to reiterate the point that this isn't anybody's particular money. This money belongs, it's the college's money. And that we have to be very prudent and very wise as to how we look after the college's money going forward. And I think by doing this year and coming up with them with a 5-year plan next year is the wisest thing to do.
Thanks, Stephen. Peggy, a new question or something to add?
Just want to clarify that I understand this correctly, and the 2021 fees were the ones that were decreased and they were collected in December of 2020. Is that correct?
Correct. We collected the 2021 fees. What we did was, instead of going by the chart that we had established 5 years ago, we reduced it by 25%, and those fees were collected at the end of last year.
So relief for COVID in 2020, the 2021 fees were reduced because they were collected in December of 2020?
Yeah, what we did to give relief going forward for 2021 is we temporarily adjusted them down, but they are paid in advance. So everyone made their fee payments.
Right, so everybody made their regular payment for 2020.
Yes, for 2020, everybody made regular fee.
2019.
Yes.
We're talking about what the fees will be for 2022 that will get paid at the end of the calendar year.
Correct.
And so my thought on this is that, you know, hopefully, and fingers crossed, business for operations picks up a bit. I mean, partly if we get recovery and people are getting vaccinated, PPE is more, I think, readily available, etc. Plus, you know, people are have maybe been holding out in 2020. Well, I can't see that well, but I'll manage. But as time goes on, it becomes more important to get your eyeglasses and stuff updated. So I guess I'm thinking that having the suggested there, the 992 makes sense, and hopefully the opticians are in a good position come December to be able to pay that, and as well not go down that rabbit hole that we were talking about with, you know, the auditors were talking about, of year after year taking a hit with the fees, which isn't sustainable in the long run.
If I can just also respond to that for 1 second. Peggy, off what you were saying, one thing that's different last year than that is the current year is last year we had a hard shutdown for about 3 months at the very beginning of the pandemic. Luckily, since then, and the openings and any subsequent shutdowns from the government, opticians have been able to still operate. So, you know, while things are not back to normal, certainly we're not in the exact same situation as last year.
Exactly. Financial situation hopefully isn't as dire this year.
Okay. And Samir, I see your hand is up.
Yeah, just I support the same thing. That's definitely a great thing to move forward with. Just have a question. Did Financial Committee thought of the reserve fund? If we go up to 992, are we still gonna need some reserve fund to be used, or what's their take on it? Did they consider in that area?
Yeah, go ahead, Fazal.
I think we can hit a pretty balanced budget and even surplus a little bit to replenish reserves. So if we go to the 992, we'll be in a positive cash flow situation. a surplus even.
Great, thank you. Omar.
Yeah, I noticed that we are in an aging population, where there's an increase in diversity and also international exposure to less regulated environment. In light of the retirement being a pressing issue, for the next 5 years, what impact this will have on the registration process?
Faisal, did you
Sure, I could
want to answer?
We were actually in the midst of trying to gather data on attrition rates, Omar, using the accounting firm with Adam and Malcolm. That seems to have shifted drastically. We had many people who were saying that they were planning on retiring in the next 3 years who actually started opting for early retirement when the pandemic hit. I think they just figure they're not able to weather it and things. So I think we've got a whole reset on demographic information. And that's why we're thinking take this year at a time and then start from scratch with gathering statistics on when people are intending to retire. Have they early retired? How many people are coming in backfilling as far as the schools are graduating? So all the math that we were planning, all the wonderful things we were trying to predict kind of went out the window last year because everything's a bit of a new game now, both with retirement and with incoming.
Any other comments or thoughts, questions? Okay, so what I'm going to do then is do a test for consensus to move forward with a motion on this one. So can I see a show of hands to move forward to a motion? Seeing Dorina, I don't know if I caught. There we go. Sometimes with the filters. So it looks good, Brian. I think we can move to a motion.
Very good. Thanks very much, Sarah. So the particular motion, and I want to make sure everyone understands what this motion is actually saying, is that we're going to be keeping the registration rates for 2022 at the 2021 rate with no 2.5 increase. That's basically the nut and bolts of what this particular motion is going to be stating. The motion therefore will read to approve that the proposed amendments to the registration fee bylaw for circulation for stakeholder feedback as recommended by the executive committee. I need a mover. Ingrid, seconder. Murray, thank you very much, Murray. All in favor? And that, I believe, is passed unanimous. Thank you.
Okay, so then, and Faisal, go ahead.
Just one thing, board, FYI, we're going to circulate this for 60 days. In order to get ready for the fall and upload this to the registration system and everything like that, we can't wait till the October board meeting to receive the feedback and approve the new fee. So we are going to be calling upon you in the summer probably for a short meeting just to transact this agenda item. So I know last summer we did do a meeting in the summer, which is unusual. We are going to have to bother you again probably in July to just do a quick maybe 1 hour meeting to look at the results of the feedback and approve the fees for 2022 so that we can start uploading it into the registration system for the fall. So hopefully that's okay.
Seeing nods, so it looks okay. Okay. So with that, we're going to pass back to Brian to review the stakeholder feedback for the proposed changes to the public registrar. Go ahead, Brian.
Thanks, Sarah. I am going to do a stick handling job here, and I'm going to throw this over to Amy because she's going to be giving us some more particulars as far as this. Amy, for the stakeholder feedback.
Sure thing. Thanks, Brian.
Thank
so
you.
This is coming back to you. It was before you the last time at the December board meeting. And these were proposals to make some amendments to bylaws that relate to information on the public register. And because it is information on the public register, we have an obligation to circulate those proposed changes to stakeholders for at least 60 days. So that was done. And we've brought back the proposed changes before you today in order to get your feedback. Now, these have also been reviewed by the executive committee. An executive committee has reviewed the feedback and is recommending to the board that you accept the proposed bylaw changes and approve the amendments. So just as a reminder, these changes had to do with two areas of the public register. The first has to do with the information that's posted about suspensions and things like practice restrictions. So currently we post information about the date that a suspension begins, but not the date that it ends. So it's difficult for someone to do a point in time look at the register and determine whether someone was active and entitled to practice on a particular date that might have already come and gone. Similar with practice restrictions, you might be able to see a practice restriction that's currently in effect, but you might not be able to ascertain just from the register if someone had a practice restriction in place at a point in time that's already passed. So that amendment would make it clear that that information, both the start date and the end date, will be posted. The other change is to have preferred names as an option on the public register. Persons can already indicate an abbreviation or a nickname that they use in practice, but in order to be more inclusive, it was proposed that the language be amended to add the word preferred name. So we have received some feedback. There were a total of 51 responses, and there was support for both proposed amendments, some of which was sort of split between people who were either in support or were neutral, but totaling a significant majority in both cases. And there were no comments or strong opposition identified by the executive committee. So it's now being brought back to you as a board to decide on whether to go ahead and approve these proposed amendments. So I'll pause here and turn it back over to Sarah and Brian.
So we'll open the floor to questions, and I see Murray, you're first up. Go ahead, Murray.
Thank you. And this is a housekeeping item on the briefing notes. The first paragraph in the for consideration section in the briefing notes, I believe the date should be December 18th, 2020 to February 2021.
Thank you, Murray. I think we went the opposite direction as Ingrid's brain on that one. You're absolutely right, yeah.
Thank you.
Any other notes or comments, questions on this one? Not seeing any. Okay, let's see if we can move forward with a show of consensus for a motion on these amendments. Okay, I think that's everyone. So Brian, I will pass over to you.
Thanks again, Sarah. So there are actually two motions on this that we will go through. First motion is going to read to approve the proposed amendments to Articles 15-6, 21 of the bylaws. So I need a mover on that one. Netta, thank you, Netta. Seconder. I'm going to go Peggy this time. I saw her name, her hand up. All in favor? Passed. Thank you very much. Second motion is going to read to approve the proposed amendments to Article 15-6, 16, and the addition of the new proposed subsection 32 and 33 of the bylaws. I saw Henry's name in a hand up there, so I'm going to give him the nod for the motion to make that particular motion if I could. And I need a seconder. Ingrid. Thank you very much, Ingrid. All in favor? Passed. Thank you very much.
Okay. So at this stage, we will now be recessing the public session. So want to thank everyone who joined via